Ladies and gentlemen, good day and welcome to the Sequent Scientific Limited Q1 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhishek Singhal. Thank you, and over to you, sir.
A very good morning, and thank you for joining us today for Sequent Scientific's earnings conference call for the first quarter ended financial year 2023. Today we have with us Mr. Rajaram, Sequent's Managing Director, Sharath, Joint Managing Director, and Mr. Raghavendra Rao, CFO, to share the highlights of the business and financials for the quarter. I hope you've gone through our results release and the quarterly investor presentation, which have been uploaded on our website as well as the stock exchange website. The transcript for this call will be available in a week's time on the company's website. Please note that today's discussion may be forward-looking in nature and must be viewed in relation to the risks pertaining to our business. After the end of this call, in case you have any further questions, please feel free to reach out to the investor relations team. I now hand over the call to Mr. Rajaram to make the opening comments.
Thank you, Abhishek, and good morning, everyone. A very warm welcome to our Quarter 1 earnings call. Joining me in today's call are Mr. Sharath Narsapur, Joint Managing Director, and Mr. P.V. Raghavendra Rao, who has recently joined the team at Sequent as the Chief Financial Officer. A very warm welcome to him. Mr. Rao comes with a very enviable track record of senior leadership experiences, a large part of which were spent in leading pharmaceutical companies. Over the last 3 months, I've had the opportunity to take stock of our businesses, met several customers, and engaged with employees across many locations. And I am more than ever convinced that Sequent has a very unique, sustainable long-term opportunity, and our strategy will position us well in the fast-growing animal health industry. Our business this quarter has demonstrated enormous resilience in a macro environment which is affected by geopolitical issues, inflation, recessionary pressures, and of course volatility in certain currencies. Coming specifically to our Quarter 1 results, the results are a mixed bag, impacted by a few one-offs. In Quarter 1, our momentum in the API business was impacted because we had an exceptional one-off fire incident at our Vizag facility in May 2022. There were no injuries or any impact on people, and while this would not impact our business over the financial year, it did have an impact in the quarter as the facility was closed for operations for a brief period. And I'm really glad to inform you that the entire team worked day and night, and the factory has resumed normal operations since early July. We have made significant investments to bring the facility back on track in record time. And in fact, we have used the downtime to strategically upgrade our infrastructure and processes to match the highest global standards. In this quarter also, we've submitted a new VMF filing, and currently we have a total of 25 US VMF filings and 11 CEP approvals, along with a robust near-term pipeline. Our other strategic manufacturing facility for APIs at Mahad has received the ISO certification for 14001, which is for environment, and 45001, which is for health and safety, which is a further validation of our team's efforts to maintain the highest standards on the EHS front. Coming specifically to our formulations business, we had a healthy double-digit revenue growth in constant currency terms. In fact, all the markets within the markets, of course, in constant currency terms did very well. And while the volatility in the exchange rate has had an impact, our in-market share positions have grown much stronger. Our LATAM business, led by Brazil, has really gained strength, and we have completed the integration of our recent acquisition of Nuri, which gives us a strategic entry platform in the companion animal segment in Brazil, which is amongst the fastest-growing segments, and Brazil is also the fourth largest companion animal market globally. Of course, the hyperinflationary pressure in Turkey remains a challenge, and the detailed impact of that on our financial results has been laid out to you in our quarterly results presentation. Our formulations business in India has also maintained a growth momentum, and we're very confident of the opportunity that the India market presents. So overall, while the start of the year has been impacted by one-offs, we remain very confident and we are on track to achieving our strategic objectives. I will now hand over the call to our CFO, Mr. P.V. Raghavendra Rao, to give us an update on the financial performance.
Thanks, Raja. And a very good morning to everyone. I am happy to address this forum for the first time in my capacity as a CFO. I am excited to be part of Sequent journey and look forward to building this company as a major global animal health company with the team here. I will now briefly update you on the key metrics for Q1 FY23. Our total revenue for Q1 stands at rupees 3.4 billion, which is up by 12.8% YOY in constant currency terms. On a reported basis, the growth is 6.5%. The major driving force of the growth has been recorded from our formulations business, with a strong 19.5% YOY constant currency growth. However, on reported basis, formulation business grew at 7.9%. The LATAM region continued its growth momentum, delivering 17.3% growth. Even in the face of market challenges, our India business has grown by 4.7%. The contribution from the formulation business stands at rupees 2.4 billion. As mentioned by Raja earlier, we witnessed a fire incident at our Vizag facility in the May month. Consequently, our API business was affected and operations were hampered for a few days, registering lower than expected revenues of rupees 888 million for API, which is down by about 5.9%. The input costs for both APIs and formulations have stabilized to some extent, albeit at a higher level, and also for some specific operating expenses like utilities and logistics. However, the inflationary pressures continue to sustain owing to elevated price levels. Travel-related costs have climbed back to pre-COVID levels with the easing of travel restrictions and increased vaccination coverage of citizens in most geographies that our businesses operate in. EBITDA, excluding ESOP costs, stood at rupees 201 million, while the reported EBITDA came at rupees 110 million after considering the non-cash ESOP cost of rupees 91 million. Margins continue to be affected by macro factors like inflation in our key input materials, disruptions in supply chain, putting our logistic costs under stress. I would now like to address the situation in Turkey. Due to continuing inflation in Turkey, which has exceeded 100% over the last 3 years on a cumulative basis, accounting under Ind AS 29 on hyperinflationary economies has got triggered. Accordingly, the financial statements of subsidiaries in Turkey have been prepared in accordance with Ind AS 29, which has impacted the consolidated PAT by about INR 9.5 million. On the balance sheet side, we had witnessed a slight increase in the working capital from Q4 FY22 as we built strategic stocks for some of our key products in line with our plans. Increase in net debt is on account of newly acquisition, and reduction of investments is owing to MTM of treasury shares. I would like to conclude my remarks by stating that this quarter has been challenging due to the incident at Vizag, loss reported separately as exceptional item, and also extreme currency volatility. The team is extremely focused on execution on both business and cost trends. Thank you, and we can now open up the floor for Q&A. Thank you very much. And you can take the Q&A, please.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. first question comes from the line of Vishal Manchanda from Systematics. Please go ahead.
Hi, good morning, and thanks for taking my question. With respect to the API business, so the current quarter was impacted by the fire incident, but do we expect to kind of make up for it in the subsequent quarters? So is the run rate going to be higher than, and will meet the annual targets that we would have set for the API business?
Thanks, Vishal. Yes, as we have said earlier also, it did impact this quarter, but we expect to, recover that over the next 3 quarters within the financial year itself. Yeah, so it will spill over into the next 3 quarters and we'll be recovering it. Fortunately for us, the demand continues. The customers are there with us, and we've been able to, recover the plant quickly. So we should be able to cover it up in the next 3 quarters.
Okay. And second, on the CDMO opportunity, has that come into the numbers, or that's yet to start coming into the numbers?
So I think that's something we've spoken about earlier, that the CDMO piece will be a bit more back-ended towards for FY23 and will get its full realization more in FY24. So that continues to remain as per our plan.
And do you expect to add more molecules during the year to the CDMO business on the API front?
Certainly, but I'll invite my colleague Sharad to speak a bit about that. Yeah.
So, as we speak, we have added already a molecule, though it is not of that grade 5, and we are continuing our discussions with the customers. So, we hope to add a couple of molecules by end of this year on CDMO.
And with respect to the capacities on the API front, we have adequate capacities for the next 2 years. Would that be fair to say?
Yeah, we do have adequate capacity, and we also undertake continuous debottlenecking and rebuild the capacity by improving the efficiency. So that's an ongoing exercise.
Okay. And just on the gross margin, so is there a way we can bring that back to the same old levels, or this would kind of be around the current levels, around 42%?
So certainly, as we've given a guidance before, we have clearly to reach back to better margins than we are today. It will take us some more time. But very clearly we are looking at, improving the margins as the outside situation improves. But also importantly, we have, initiatives and projects in the company which are designed to improve our margins. Margins are a function both of the mix that we have as well also of the prices and the costs. And on all 3 initiative areas, we have initiatives in place.
Okay. Thanks. I'll come back in the queue.
Thank you.
Yeah.
Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Ashish from IIFL AMC. Please go ahead.
Yeah, thanks for the opportunity. So I believe Turkey is the most important market for us, and even in terms of profitability, it's one of the best placed segment for us. So what's your view as far as our business in Turkey is concerned? Do you think there could be some more write-off, and what is the behavior, how the distributors behaving? Any more color on this market would be helpful.
So look, thank you, Ashish, for asking this question. Turkey is one of our important markets. It's a market where we have a strong business in terms of both market share as well as the portfolio which we cover. And on the demand side, we continue to see strong demand for our products, and as well as our competitive position is just getting stronger over there. Having said that, there has been a particular situation in Turkey in recent times where, the currency has impacted the businesses. So we are taking all the necessary steps which are there in order to de-risk our business over there. More specifically, in looking at more exports out of Turkey, in looking at instruments which are required to manage the currency risk, as well as also look at the management of working capital over there in terms of distributor credit, in terms of supply credit, etc. So there are a whole set of measures, but there is still substantial amount of uncertainty around the currency and volatility over there. And some of it is reflected into a very specific case of accounting this year. And therefore, we will be watching it carefully along with all the initiatives. But we are also going to be very disciplined in the way in which we are going to, invest and grow in the market. So we certainly are not, going to be reckless in our growth ambition over there. So we have a strong position, but we will wait for some more stability over there before we commit more. Does that answer your question, Vishal? Ashish? Hello?
The line of Ashish has been disconnected.
Okay. Yeah.
So we will take the next participant. The next question comes from the line of Aditya Khemka from InCred Asset Management. Please go ahead.
Yeah, hi. Thanks for the opportunity. So firstly, could you give us a sense of where we stand on the ability to pass on to consumers in terms of the cost inflation that we are facing? In the last Concall, we were discussing with you about the split of your formulation revenue into, let's say, branded generic and unbranded generic. Any thoughts, updates on that would be very helpful.
Okay, so there are two parts to our prices. One is on the API side, and the other one is on the formulations. When it comes to API, Aditya, between 65 to 70% of our business is actually in regulated markets, and they are with large sort of multinational customers. And over there, we have long-term contracts, and as and when the contracts complete their period, we renegotiate our prices, and that would be something that we would be passing on. Yeah, so there is an ability clearly to pass on. Of course, there is always a 30-odd% which is the spot business in API, which sometimes gets competitive depending on where we are. But for us, fortunately, on the API side, a large part of it is the regulated markets. Coming on to the formulations part of the business, we have in most of our markets now a substantially strong branded product business, and therefore over there we've been able to pass on price increases. Of course, like for example, we've been able to pass on a lot of price increases. Of course, the currency situation does not help us, but we continuously do that. In Brazil, again, we've been able to systematically pass on the price increases. But wherever our customers on the other side are large central buying agencies, even for branded generics, it takes a little longer sometimes to pass on the price increases. But we are seeing that in all markets, there is now slowly an ability to pass on price increases, and we're doing it very systematically, obviously, one portfolio product at a time. But I think that, now with the inventory levels getting more stable across in markets, we should be able to systematically pass on price increases.
Just a follow-up on that, I just cannot understand that while we face inflation across our products at the same time, why is it that we want to pass on the pressure to the clients in a systematic, slow-phased manner? Specifically, that could have been the case had there been a lot of competition and the competitors weren't passing on and we were scared of losing market share in the sense that our product would become dearer versus the competitor. So that, to me, is the only reason why we would do it in a more phased and systematic manner, other than contractual obligations, which I understand in the API space there are. So can you talk a little bit more about why we are choosing to go through a phased, systematic route and not an immediate price hike, because our input costs have gone up immediately?
Yeah. It's a good question too. There are two components. In certain markets where you don't have a very high inventory, you can pass on the price hike fairly fast, right? But in many of these markets, distributors tend to hold significantly higher amount of inventory. And over there, it takes more time to pass on some of the prices. So it's more about, really on the cycle with which the inventories are managed and your ability to pass it on then. So that's largely. And again, it's a lot of markets like, particularly in countries like Brazil, etc., there are a lot of contractual purchases which happen from large farms who purchase, some of our medicines. And over there, as the contracts expire, we renegotiate and we pass on that.
Understood. And on the API side, you said you have long-term contractual agreements to your purchases. Two questions on this. So are we to understand that while we enter into long-term contract selling agreements, we don't enter into long-term contractual buying agreements because we are facing raw material inflation immediately, but we are expressing our inability to pass on immediately there? And secondly, what is the average tenure of the selling agreements that we have in these API business?
So I will. It's not that we are bound by that. We do have interim price increases which are there, and it again depends on the inventory level which the customer has. But I'll ask Sharad to explain that a bit more to you. Yeah.
While the contract may be long term, but then there is a opportunity.
Sharad, you aren't audible. You are a bit away from the mic. Would you mind speaking closer?
Yeah, can you hear me now?
Yes, Sharad. Thank you.
So while the contracts themselves are long term, but then there is an inbuilt provision of looking at the prices based on the market conditions, and that happens at a frequency of every year, or if the prices are going beyond a certain limit. So I would say that there is always an opportunity, but there is a periodicity with which we can do it. And so the contracts have been entered recently, so it does take some time. Conditions are always on particularly on the price side, and everyone is aware of it.
Yeah, and if Sharad, you can also address our procurement of raw material practice. Like we are being considerate with our buyers and cognizant of the inventories that they're holding, why aren't our suppliers doing the same favor to us?
Oh yes, even on the procurement side, we do have contracts. So for the perennially produced products and where there is a contracted quantity, we also go back and have the contracts, and they are in place. So that advantage we take. But then if you look at, there is a certain percentage of contribution, 40, 60. So if you look at the commodities, solvents and other things, the volatility has been really high. So that's something which we'll have to deal with.
All right. And just one last question. Can you split our formulation and API revenues into buckets where we have the ability to pass on immediately or with a lag versus buckets where we won't have the ability to pass on at all because the buyer is large, concentrated, and essentially there's a lot of competition, therefore we can't really pass on the price?
I don't think we can sort of get into that degree of specifics, but, you should broadly look at it that, our API business has about 65 to 70% is regulated market, and that's the piece which Sharad spoke to you about. And, that's pretty much, I think, should help you, make some conclusions on that. But beyond that, I don't think I can sort of split the numbers further for you. I mean, we can definitely, on a separate chat in our office or something, we can catch up and we can take you through the details in more. Yeah? Next question.
Thank you. Next question comes from the line of Vikas FQ. Please go ahead.
Hello. Am I audible?
Yes, you are. Yes.
Yeah. Hi, good morning, and thank you for taking up my question. It's in specific to the fire incident that happened in Vizag. Could you please specify that what could be the top line and bottom line impact in terms of absolute terms and in terms of EBITDA percentage because of this incident that would have contributed to lower numbers? Thank you.
So look, I think we've said, one is that we expect there to be no impact on it as far as the full year is concerned. And therefore, that should pretty much tell us that, we don't expect an impact either on the top line or on the planned EBITDA over the course of the year. More specifically on the quarter, I think we're expecting that about 14 to 15 crores would have been the kind of, top line that would spill over into the other 3 quarters. Yeah, but over the course of the year, we don't see any impact on that. In fact, we've started covering some of it already in this quarter itself. So.
Thank you so much.
Thank you. The next question comes from the line of Ashish from IIFL AMC. Please go ahead.
Again, thanks for the opportunity. Any more color on Nouri acquisition? So is there an opportunity to cross-sell? And given that this will be our first entry in companion markets, how do you see this thing panning out? And would the companion segment have higher profitability versus the non-companion market?
So we're just completing the integration and in the first quarter. So I think the integration has gone well. Right now it is more additive. But as we go along, we think that this gives us a good entry into companion animals, and I hope we'll be able to share more with you about the performance of it in some time. But more specifically on companion animals, this is clearly an area of focus for us, as well as the direction in which the growth of the animal health industry is happening. And the Brazilian one is our first sort of entry into that area. We are looking at expanding our portfolio in some of the other countries where we are already there, more into pet animals, and I think we'll be able to talk to you more about it in some time as these businesses begin to ramp up. But right now it is tracking on plan as far as the integration is concerned, and we should get some better results to share with you in maybe 2 or 3 quarters.
Yeah. And okay, so by quarter 4 of this fiscal, you expect this the consolidation to happen, right?
So I think the consolidation and integration has already happened for Nouri, but it's really with an acquisition which is now got integrated. But how we are able to leverage it and grow further, that is something which I think towards the end of this financial year, we should be able to share with you on how the performance is. Okay, great. So lastly, at some point in time, we were expecting, around 15, 16, or to that extent, even 18% EBITDA margins. So given current construct and how the portfolio shapes up for us, would you be still pretty comfortable, guiding on that number like 2-3 years down the line? Well, certainly. I mean, if you're, that is a reasonable sort of number to aim for, and that's something that we would be aiming for in the time frame which you've indicated. Yeah.
Okay, great. So lastly on this albendazole, so how the prices now, and is the market back to normal now, because we had seen sort of a spike in between? Any color on this would be helpful.
So I'll give you an opening thing. First of all, I think, our WHO supplies which were there, that part of the market has come back, and our customers are still taking our product. And so that part of it is more or less stabilized. Then the rest of the market, which is really the use of albendazole for animal health, we are seeing, a demand which is more or less stable. It is competitive, however, in terms of pricing on that part of the segment.
Okay, yeah. This helps. Thank you so much, and all the best.
Thank you.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Harish Hindocha from SVS Securities. Please go ahead.
Good morning, sir. Just one point. All this raw material price increase, currency issue, everything. there is a time lag in passing on the price increase, etc. Can you just tell me when will be your first normal quarter in this year?
I think it's quite a right question to ask, especially in this quarter.
Yeah, because in last 3 quarters, the company has been, from somewhere to nowhere. So can you just explain to me, because we can understand for a quarter or so, but it's already been 3 quarters that every quarter the company comes out with some new issues. So can you just tell me, because all the companies are passing on, it's a routine, it's a currency issue, everyone has the same issues. But I think we are taking much more time. So can you just tell me when the first normal quarter, is it in this financial year? Thank you.
I think, let me just firstly react to that. I think it's a fairly incorrect conclusion that, the company has had this issue for the last 3 quarters. If at all, I think the very fact that we are a diversified company has helped us manage when we've had one odd part of the business, impacted by currency. We've had an API growth which has been, of very high order. There have been times when that part of the business has had a pressure. We've had good growth coming in from some of the other parts of the business. So, I'm quite surprised that you're concluding this. It is true that every quarter we transparently will share what might be some extraordinary events, but that should not be considered to be, something which reflects in the performance.
Maybe I'm wrong. So when will we have a normal quarter?
I would say that it would be wrong, because there is no such thing as a normal quarter in a business. I mean, every quarter will have surprises. Yes, this particular quarter for us, we have had an extraordinary impact of, a fire. So there are 2 incidents which are over here. One is the currency impact, which has happened because in a specific market, accounting standards require us to trigger classifying it for hyperinflation, right? That's what has happened. And of course, there is an incident of fire. But the fact that you will have raw material increases, decreases, passing on pricing, that's in the normal course of business which will happen. And you'd have seen across all companies will have this issue, and we are able to pass on our prices where required, and we are able, because you have to look also in the context of our top line, that we are growing our formulation business almost at 19% in constant currency within the market. We are growing our API business, if but for the fire incident. If you look at year on year, we would have grown this business closer to about between 10 and 14%. And I think you should look at our business on an annual basis, on a year-on-year business, because it's the best way perhaps to look at how we are performing. Yes, the EBITDA margins have been under pressure like it's been for many companies in this industry, but because of our portfolio, we continue to maintain that, we will come back in the second half of the year closer to the guidance that we've been historically giving. At least directionally, we will be there. So I would be quite surprised if you're concluding that, we've had 4 quarters of, uncertain performance. That's not true at all.
Thank you. Mr. Harish, we request that you return to the question queue for follow-up questions, as there are several participants waiting for their turn. Next question comes from the line of Jagveer Singh from Shade Capital. Please go ahead.
Good morning, sir. My question is regarding to the EBITDA margins and the profitability. In the last 3-4 years, company never give the respected EBITDA margins or profitability. We have, as the last caller asked the question, we have some other issue every time, Turkey issue. So we have any guidance for the FY23 or FY24 or the reasonable EBITDA margins or the profitability?
Thank you for asking this question. I think it helps me clarify again. I think our general guidance, and we've been indicating, is that, look, we want to improve our EBITDA margin between 100 and 150 basis points every year, and that, we would like to grow the company in the mid-teens. Now, that's the broad sort of direction we have given. There has been a bit of rebasing because of a series of things which have happened internationally, whether it was COVID, whether it was, other incidents which have impacted everybody across. And therefore, while we may have delayed the time frame, we continue to maintain that, we will grow our business in EBITDA terms between 100 and 150 basis points every year, and that we will grow our top line, in early teens, okay, or mid-teens. So that remains, and, I can sort of say that that's not something that's going to change. Now, coming more specifically on what's the nature of our business. You see, we have two types of businesses. One is the API business, which is, one which we are building, increasing our base of regulated market customers, and that's sort of trending in that direction. The second is a formulation business, which often requires us, even if we make a good gross margin, to invest in the long term, and some of those costs keep coming in as we begin to expand our market. So as we enter new markets, even if the margin is good in terms of gross margin, we invest, on the field, we invest in promotion, and that part of it, is an investment which we are making, and therefore the formulation business, depending on the growth of it, will begin to pay off. So it's sometimes often the mix that is there. But I think you should look at the overall direction of the organization, which is to, give anywhere between, mid-teen kind of a growth and, 100 to 150% basis points of EBITDA incremental every year. And expect that, as we sort of end this year, we will be far closer to the kind of levels that we have indicated earlier.
So, sir, any guidance for the FY23 or FY24 on the profitability front? I am talking about the PAT, excluding all the other incomes and all these things, currency losses and.
So, certainly, as I said before, this quarter is the one-off quarter. So if you keep this quarter off, then the next 3 quarters we should continue to see closer to double-digit numbers, and both on the top line and the bottom line.
Because, sir, I am talking about another company. This is not very close. This is very close to business of our company. This is NGL Fine Chem, and they also export in the 23, 25 countries. So this company has very similar problems, but even then they are doing some respectable EBITDA margin and profitability. They lost some EBITDA margins in last 2-3 quarters, but not like the Sequent.
So I won't comment specifically on other companies, except that you should know that we have 2 businesses, an API business and a formulation business. The API business is about 1/3 of our portfolio, and I can confidently say that our API business is as competitive on a standalone basis as any other similar business.
Because this company is, this is earlier owned by the Arun Gupta, and all the companies owned by the Arun Gupta have some kind of problems like Solara, Sprite. Now this is owned by the Carlyle, but we have in all 3 companies we have some similar kind of problems. There is no profitability in last 3-4 years. There is one quarter goes, 4-5 quarters bad. So this is even have so we were expecting some good numbers in the Sequent when it is took over by the Carlyle. So here also the same problem.
So I can't comment on any other, connections that you have on this particular company, but, we are a standalone publicly listed company, and our own standalone performance is what we should be talking about. And, I can say once more that our strategy is on course. We are fairly confident that, in the remainder part of the year, we will recover whatever we lost in the API fire incident, and we will be, topping the year closer to the guidelines that we generally have given in the market and what you've been expecting from us.
Thank you. Mr. Jagvir, we may request that you return to the question queue for follow-up questions, as there are several participants waiting for their turn. Next question comes from the line of Prashant M., an individual investor. Please go ahead.
Hello. Am I audible?
Yeah.
Yeah. So this is regarding the Turkey hyperinflationary scenario, and we know that it's not a new situation. It's like past maybe 10, 15 years. That problem is still there, and it is going to be there. So in that context, like what is the strategy of our company to handle it in future? And I mean, this is an exceptional item, which I understand, which is shown in the expenses. But what is the probability that it will not occur again in future? Thank you.
So as first, maybe on the specific, and I'm glad you raised it, that it's an exceptional item. Raghav, our CFO, will speak to you about, and then I can give you some direction on how we are handling Turkey. Yeah.
Yeah. So Prashant, the impact for the quarter is about 9.5 million on the overall PAT. So that's for this quarter, and this gets basically triggered because of India 29, as I mentioned, when the cumulative inflation for the last 3 years crosses 100%. So there will be some impact on account of application of this accounting standard in the coming future, in the coming quarters, and then it depends upon how the inflation moves in Turkey. So, but kindly note that the impact, in my opinion, again depending upon the various factors, could be in this range or lower than this.
Thank you. Due to time constraints, Mr. Prashant will request you to get back into the queue. Next question comes from the line of Aditya Ranjan Patnaik from Amba Holding Advisors Private Limited. Please go ahead.
Yeah, good morning. My concern is that, am I audible?
Sorry, we can't hear you clearly. Can you speak slowly? Yeah.
Yeah, am I audible?
Yes.
Yes.
Yeah. Thank you for taking my question. Please put some color on your market share about the API or formulation business, whether any growth or expected for any guidelines for next quarters. And another second question on that, how the capacity utilization you have done this quarter versus your last quarter?
Okay, so I'll answer the first one, and then I'll request my colleague Sharad to answer on capacity utilization. First, this market overall in animal health, is generally growing between 2 to 5%, and in some specific segments of the market like companion animals, etc., it grows a little faster between 5 to 7%. Okay, so that's how the overall sort of market grows. In our plan, it is really to grow more in the early to mid-teens kind of a growth is what our ambition is, right? So that should tell you that, we definitely want to grow faster than the market in terms of our total company performance, both in the formulation side as well as on the API side. Okay, so that's, I think, as far as the growth plans are concerned. It is, of course, distributed between the markets depending on, if it's a mature market like some parts of Europe, or it's a more, fast-growing market like Brazil or India. And maybe, Sharad, you can just talk on capacity utilization.
Capacity utilization is hovers between somewhere between 68 to 75%, and it keeps varying during the year based on what products we run, which campaign we run, and in which part of the year.
Okay.
Does that help? Does it say? Thank you. Yeah.
Yeah.
Thank you. The next question comes from the line of Shashi Ranjan, an individual investor. Please go ahead.
Good morning, all of you. I have two questions. Am I audible?
Yes, Shashi. Thank you.
There are two questions. One question goes straight to Sharad, and the second one will be for you, sir. And the first question is to Sharad. What are the molecules you are looking at very eagerly out of the 25 filings that you have done? which can improve upon the valuation of the company?
See, out of the 25 molecules which we have filed, there are quite a few established generics, old generics, wherein really we are building long-term contracts as we spoke about with our multinationals, which will drive the growth for those old generic molecules. And if you look at the forthcoming, they are all new age molecules, some of them which are under patent, and that gives us an opportunity to go and tie up with multinationals and convert them even into a CDMO. Okay, so that's the kind of area of growth which we are looking at. I think that should be the direction.
Okay, good. Now the question is, what are the status of like Provet and etc. How they are faring?
So we are not able to hear you.
Your voice is breaking. We're not able to hear you.
Can you hear me, sir? Hello?
Yeah, we heard the first question now. The second one we are not hearing. Can you say it again?
The second and the final question is,
you're breaking up, Sashi.
You need to repeat. We couldn't hear it at all.
Me now, sir?
Yes.
Acquisitions done in the...
Yeah, you can ask the question. Yeah.
Okay. Yeah, here I go. Status of the acquisition. How sooner Sequent is the top line and the bottom?
Sorry, I couldn't get it at all. We just heard something about acquisition, but I couldn't hear what the question was.
Can you dial back again, please? Can you take the next question in the meanwhile?
Yeah.
The acquisition, which is the one or two of that acquisition that is going to help Sequent improve its top line and bottom line?
Which are the acquisitions which are going to top line and bottom line?
Make out very clearly. Yeah. But if your question is that which of our acquisitions in the recent times is going to help us improve our top line and bottom line, the answer is all of them have been directed to. Was that your question? Which of our recent acquisitions will help us in top line and bottom line?
Correct.
Yes. Okay.
Correct.
So all the acquisitions that we have made are at this point of time contributing to our top line and our bottom line. We have a specific, currency-related issue in Turkey, but that's purely from a currency point of view. But the business on a constant currency basis is in fact growing very well. It is also very profitable. That's in Brazil. On Turkey, that's on Turkey. On Brazil, of course, we are growing, substantially ahead of the market and in double digits. Our Spain acquisition is the one where, we are using as a beachhead for other European countries, and that's the place where we are also seeing growth coming both in top line and bottom line. So, in summary, I would say that all our acquisitions are meant for these. The one we, are right now completing is the Nuri one, which has just got completed this quarter. And that's the one which will come in accretive as we go during the rest of the year.
Thank you. Next question comes from the line of Tanuj Mehta, an individual investor. Please go ahead.
Thank you for giving me an opportunity. So firstly, I wanted to understand for our API business, we had the fire incident. Keeping in mind that if this wouldn't have happened, how would the API business, look like into the financials? That is the first one. The second question is that, there have been the last few quarters where we've seen lackluster financials. So can we see that, we are nearing our, bad phase, or maybe going ahead, our financials will, improve on a sequential basis, and can you throw some light on that?
So on the first part, what's the impact of the fire? As I said, it's somewhere around 14 odd crores is the kind of sales that was impacted for us, which, as I repeat, is something that will get covered up during the year and therefore will have no material effect as far as the year is concerned on the API side of it for related to the fire incident. On the second part of it, on your impression on the EBITDA performance, I think we've explained in the last few quarters that there has been some pressure which has come in, and directionally that took us to a lower level than what we saw perhaps a year ago. And we are fairly confident that the measures which we have put in, as well as the demand which is coming in from our customers, we should be moving northwards as far as the rest of the year is concerned. So to that extent, this should be the lower end of it.
Thank you. The next question comes from the line of Varun Pinto from Value Educator. Please go ahead.
Hello, am I audible?
Yes, Varun. Yeah.
Hi, sir. Thank you for the opportunity. So my first question is that in Europe, Europe is seeing an energy crisis right now, and there are talks that companies in Europe will have to probably take production to. Is that a risk that we see over the next 2 quarters?
No, we do not see. So it is true that there is a lot of pressure which is coming in terms of cost of utilities, etc. in these countries on account of the thing. There is an issue on utilities. There is some pressure coming in a couple of markets in terms of wages. But as far as our portfolio is concerned, we don't see any impact on the demand side of it. Yeah. So to that extent, we see no reason to scale back anything in production. Of course, there will be, calibration which has to be done in terms of our pricing, in terms of our cost structures, etc. But nothing on the demand side which would require us to scale back on anything in production like you are hearing. No.
Okay. And sir, our Turkey subsidiary, what kind of dependency do we have on China for raw materials? Is the raw material for Turkey mostly coming from China?
So generally, on an overall basis, I would say our companies which are there in Turkey, in Spain, and in Brazil do import, a substantial part of their API requirements, from China, but nothing which is impacting us right now in terms of availability or stability, because we're covered reasonably well for this.
These are dollar-denominated imports, right?
Sorry?
The imports are dollar-denominated, right?
Yes, the imports are dollar-denominated, and that tends to be therefore the specific issue only for Turkey. It is not the issue that we have for Brazil or for Europe, because you have the selling price which is often calibrated to the exchange rate. So we don't have an issue on that.
Okay, that answers my question. Thank you, sir.
Pretty much. Okay.
Thank you. As there are no further questions, that was the last questions. We have reached the end of question and answer session. I would now like to hand the conference over to the management for closing comments.
Okay, thank you very much for everyone for attending this and for your questions. And we hope we've been able to answer most of them. And as Abhishek said, if there is anything that you want to get more details of, you can write to us at our investor relations. I just want to reiterate a couple of points that, this has been a very specific quarter where we've had a couple of one-offs which have made it challenging. But there is inherently, we are in a good position as far as demand for our products are concerned in the market as well as from our customers. And therefore, we are convinced that, going ahead with good execution as well as with all the capabilities that we are investing in, we should, continue to get good growth for the rest of the year. Under the current circumstances. And we thank all of you for your continued support, and we can now close the call. Yeah. Thank you very much.
Thank you. On behalf of Sequent Scientific Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.